What is a tax sale property? Today, you'll learn how tax sales work and about a hidden opportunity. Ever wonder how to get real estate for pennies on the dollar? Tax sales can be your answer. And there's even a hidden opportunity in tax sales that very few people know about that could be your door to making money in properties that someone else buys at the tax sale. Incredible, right? Make money on a property that somebody else buys. What you're about to learn can completely transform how you think about real estate investing. Now, I'm not talking about traditional sales or even foreclosures. I'm talking about properties that sell for a fraction of their value because of one simple thing: unpaid taxes. Now, the wealthy have known about this hidden corner of real estate for decades. They've built fortunes buying properties for pennies on the dollar, all because someone stopped paying their property taxes. But here's the interesting part. You don't need to be rich or well-connected to take advantage of these opportunities. You just need to get to know how the system works. Because while most people are fighting over overpriced listings, dealing with hidden bidding wars, there's an entire market of properties that are selling for a fraction of their value, literally for pennies on the dollar. This is a government-run system. It's been operating for over a century, but still it's not widely known because, frankly, local governments don't do a very good job of advertising it. They're not there to create investment opportunities. They simply want to collect unpaid real estate taxes. And that is exactly what makes this opportunity so powerful. By the end of this video, you'll understand exactly what tax sale properties are, why they exist, and what you need to know before getting started. Are you ready to find out? Well, let's get started. First, the basics of exactly what creates a tax sale property. Every real estate owner in America has to pay annual real estate taxes. Those taxes are what fund schools, maintain the roads, get the trash picked up, keep emergency services running. In fact, property taxes are absolutely the lifeblood of local communities. So what happens when these taxes don't get paid? That's where the story of tax sale properties begins. When a property owner falls behind on their taxes, the local government, well, they don't just write off that debt. They take action because they have to. They need to collect that money. And that action comes in the form of a tax sale. The government essentially is saying, if you won't pay those taxes, then we'll sell your property to someone else who will pay those taxes. But here's where it gets really interesting for you as an investor. They're not trying to sell the property for its full market value. They're only trying to recover the back taxes and costs associated with the sale because that's all they get to keep out of the sale. So let me break down what that means with some real numbers. Let's say we're talking about a property worth $200,000 where the owner hasn't paid the taxes in 3 years. Well, that owner is going to owe about $12,000 in back taxes, plus probably another $12,000 in penalties. Now, in a tax sale, the minimum bid would start at $24,000, regardless of the property's actual value. Think of that as the asking price. That creates an incredible disconnect between the market value of $200,000 and the sale price of $24,000. And it's not uncommon to see properties ultimately sell for 50, 60, or even 70% below their market value. Now you might say to yourself, well, if these deals are so good, why isn't everybody doing this? Well, the answer is that it takes specialized knowledge that most people simply don't have to buy property at tax sale. Just to start with, there are two main types of tax sales that you'll encounter. The first is a tax deed sale, where you're buying the actual property. And the second is something called a tax lien sale. At a tax lien sale, you're not buying the property, at least not yet. Instead, you're buying the government's right to collect the unpaid taxes, penalties, and interest if and when the owner pays. Now, if the owner doesn't pay within a certain time frame, you can foreclose. And depending upon the state, you'll either get the property itself for just the cost of those back taxes, or you're going to get the principal you're owed plus interest, typically at a very high rate of interest. Each state has its own system with different twists. Some use tax deeds, others use tax liens, and a few use both, like Maryland. Now, understanding this is crucial because depending on the type of sale, that determines your strategy and your potential returns and how the whole system works for you as a buyer. Both can be profitable, tax liens and tax deeds, but they are totally different. They require different approaches and different strategies. Tax sale properties are sold cheaply and you get ownership of the property, but there's a trade-off. Tax sales are not like regular real estate listings and purchases. You don't get to inspect the inside of the property before buying. They certainly don't do open houses and no inspections. And that can make it difficult, for a buyer. Plus, you have to pay cash for the property. You can't use a mortgage to pay for the property. And there can be serious issues, title issues, having to evict an occupant issues, property condition issues. And success comes from knowing how to evaluate those issues properly, understanding the local rules and local laws, and having a really solid understanding of the property itself, its value, and what kind of repairs it needs. And this leads us to understanding how the tax sale process actually works, because this is where many, many new investors, either they make their fortune or they make a big mistake and they lose a lot of money. Now, the process of a tax sale starts long before the auction. It starts when the property owners fall behind on their real estate taxes. Now, they're going to receive plenty of notices from the government letting them know they're behind, asking for payment, and warning them that if they don't pay the taxes, the property can be sold. The government's then going to follow a strict legal procedure and process. They're going to attempt to notify everybody who's interested in the property, from a mortgage company to the owner. They're going to give out plenty of notices, but this process moves forward, ultimately leading them to post a notice on the door and hold a public auction. Now, if they don't pay off those taxes, they're going to hold a public auction, and there'll be plenty of public records for you to research and learn about the property. Usually they're going to have an ad in the local newspaper about 45 days before the sale. It's also going to be online, easily findable by a Google search. And once you get that list, that's when your process starts. You're going to look over the properties and decide which ones you want to bid on. Typically, these sales are held at the county courthouse, probably inside a courtroom, occasionally on the courthouse steps, and they're going to follow very specific rules. Now, some jurisdictions use what's called a bid-up system, which starts at the amount of taxes owed. That's most typical. Minimum bid is the amount of taxes. Others use a bid-down system where they're selling tax liens, where you accept an interest rate for your tax lien. But whichever kind of sale you're dealing with, tax lien or tax deed, you do need to, in advance, give an ID and register and often put down a deposit. And once you win the bid, whether it's a tax lien sale or a tax deed sale, you often need to pay same day or certainly within a very short time period, usually a day or two. You're not able to get a mortgage, you're not able to use financing, you just need to use card hold cash, often sent in through ACH. And the next part's very critical. When you buy a property at the tax sale, you're not getting clear and marketable title like you would in a regular real estate transaction. What that means is that if you want to refinance the property or sell the property, you're going to need to do something called a quiet title action so you can hopefully get what's called clear and marketable title. That's either a quiet title action, typically takes $3,000 to $4,000, takes 5 or 6 months, or sometimes you can get a company called Tax Title Services to offer you title insurance, which then you won't need to do the quiet title action. But make sure that you understand there's going to be an expense and there's going to be time, and it's not optional, because if you don't complete that step, then you could end up with a property that you can't sell and can't refinance later. All you could do is rent it, but someone could come along and try to undo the sale and take ownership. So you don't want to have that happen. Also, when you're dealing with tax liens, sometimes there are redemption periods, often from at least a few months to sometimes even a few years, where the person can come and pay you back what you bid plus interest so that they can avoid foreclosure and losing ownership of the house. So make sure when you're looking at tax liens, you make yourself aware of all those rules and make sure you understand whether there are redemption periods or not and what might happen. And for example, in New Jersey, I think there's a 3-year right of redemption, if I remember correctly. And you're going to have to make sure you account for paying the taxes in those subsequent years. Now you do get a good rate of interest on those, but you have to prepare for it because real estate taxes in New Jersey are very high, and you could literally be stuck with 3 years worth of taxes before you get your property. And whenever you're bidding on either a tax lien or a tax deed, make sure that the property is one that you would actually want to own. With a tax lien, most likely you're going to pay off the lien and you'll never become the owner. But with a tax deed sale, you are going to become the owner. And when that's the case, you want to make sure that it's a property you actually want. So the tax sale business is one that you want to do a lot of education before you ever make your first purchase. There's also lots of hidden, so I would call them rocks under the water. So imagine if you're going down sort of a river in a canoe. Sometimes there are rocks right under the water that will tear open the bottom of your canoe or leave you stuck. And it's like that with tax sales as well. There are a lot of hidden things that you wouldn't necessarily know about. And I want to make sure that you do your research before you bid at those sales. Understand each state is running these sales under their own state laws. So you need to familiarize yourself with the laws in your state. You should be doing things like go down to the auction if it's one that's held physically. Some of them are online, some of them are physical. Go down and talk to people. Sit through an auction, whether it's online or whether it's at the courthouse. Watch the auction, see how it works. Read through the rules of the auction to understand when do you have to put your money down? What do you have to do to qualify to bid? How do you make that application to qualify to be a bidder? So make sure that you do all that research beforehand, and also make sure that you sit down with a local attorney who's experienced in tax sales, knows the issues, and helps guide you through the process, or go with someone that does good solid education in that business. Speaking of the education side, I do have someone that does great education in the tax sale space. My friend Tony has been doing this since the 1990s. He's probably one of the country's bigger tax deed investors, and he does tax liens also. The guy really knows his stuff. And I sat down with him and we did an interview where he was talking about buying properties at tax deed sales and buying tax liens. And also this really neat way that he's come up with where he's buying properties outside of the actual auction itself and picking up incredible bargains. And it's much simpler because you don't have to run around looking at properties and then competing at an auction. These are ones where they're just lists of properties. You buy them for the past due taxes. There's no competitive bidding, and you can just pick up the properties really, really inexpensively. I really like what he's talking about. I've done it, and I can tell you that it really, really works, and it is probably the simplest way to buy bargain properties, and you get these amazing deals. Because when you're buying a property for a year or two's worth of taxes, it's a really amazing deal. I mean, generally speaking, taxes are only 2% of the home value per year, so you get some really killer deals. So if you want to hear more from Tony, just click on the link to the video. You should see the link up there. If it's not there at this moment, it'll come up when the editor pops it up. Or look at the link down below the video. Some browsers don't support putting the link on the screen. But if you click on the link below, you'll see Tony and I sitting down, sort of talking shop, and him explaining what he does. He does a really amazing business with buying properties where there's no competition, much, much less expensive, and literally buying properties for pennies on the dollar. So go check that out. It's really amazing. Tony is an amazing guy, really knows his stuff. I've known him for many years. He is the world's foremost expert in buying at tax sales. And the way that he found just does way better than everything else, because you're talking about buying property for maybe a couple of years worth of taxes or even less. So it's pretty amazing deals out there. So this is attorney and investor Bob Diamond. Hopefully this is useful. Leave me any comments if you want any more information or if you have anything to add to this. Love to answer your questions, and thanks for being here. And meanwhile, go check out that interview I did with Tony. I think you'll really like it. You'll learn some great things there.